Welcome to Cryptocurrencies, the Future of Digital Money show at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we are being joined by a very special guest, Mr. Jeffrey A. Tucker. Jeffrey Tucker is the editorial director of the American Institute for Economic Research. He is also CEO of the Atlanta Bitcoin Embassy and managing partner of Vellum Capital and the founder of the Cryptocurrency Conference. He is author of 8 books and many thousands of articles appearing in scholarly and popular phrases of the press. Jeffrey, welcome to the show. How are you today?
I'm fine. Thank you for having me. I'm glad to be here.
We are so honored to have you join us. I want to let you know that our director, our founder of Portfolio Wealth Global, right before the show, emailed me a set of very specific questions for you that are critical for investors right now to get answers for in today's very choppy market.
Yeah, well, these are choppy markets. I mean,
to say the least.
We've got policies that are driving down regular financials and creating a lot of bearish sentiment. You know, it's important for Americans to realize we've been through 10 years of economic stagnation, essentially. After 2008, we never really got out of that. And basically 40 years of income stagnation. So we've had some bull markets and financials in the meantime, but the recovery out of 2008 is very fragile. Now, I think it might have gone much better had we not shot ourselves in the foot with these trade protectionism and that sort of thing. I mean, things went rather well in 2017 with deregulation and tax cuts. But 2018 has been a very rough year because we've got apparently a bipartisan coalition in favor of more protectionism, and that's the surest way to kill a recovery. I mean, in the 20th century, we saw several times in which mercantilist protectionist sentiment and trade wars actually destroyed the macroeconomic framework, and I worry that it's happening to us right now, which is one of the reasons cryptos have become interesting.
Wow, that's very interesting. You know, at PortfolioWealthGlobal.com/rocket, we have written extensively about the risks involved in cryptocurrencies, but also about the hidden profit angles that exist. Jeffrey, in your perspective, what is happening with cryptocurrencies today? I mean, what seemingly has gone wrong? They're down as a group more than 50% in 1 month, and almost 90% of all ICOs have already failed. Do you have an answer for this?
Sure. I mean, the failure rate and
what's the answer, Jeffrey?
Yeah, right. The failure rate in cryptos is like the failure rate in pop music. I mean,
right.
I mean, you know, the fact that 90% are failing is not unusual. I mean, 90% of movies fail, 90% of new songs fail, 90% of everything fails. So that's nothing unusual. The fact that we're down 50% is a reflection of the fact that we were up, I don't know what it was, a gazillion percent in November, December of 2017. So that was an unsustainable rise, which is obvious
right.
in retrospect. But, you know, I look back at this point last year, I'm thinking about maybe 2 weeks ago, Bitcoin was sitting at about $1,000. So now, today, as I'm talking to you, it's at 7.5 K. So this is not, to me, this is not a failure. This is an extraordinary rise. So it all depends on how you look at the charts. You know, you can get confused by looking at too short-term a chart. And, you know, we're still in a price discovery phase. Actually, we'll never leave it. But this is a new technology, and it's just gradually dawning on people that it's working. Also, keep in mind, it is an experimental technology. We're still in the early phases of the crypto revolution. It's still at the early stages, and there's still a lot of things to work out. Things break every single day. User interfaces are catastrophic. The people who know about the sector talk as if they're speaking Klingon. You know,
so true.
It's very difficult for regular people to kind of get into this market, but you know, with great risk can come great reward. So the other thing to remember is that no technology enters into the world cleanly and smoothly. You know, I think back, well, I don't personally think back at that, but the history books do, at the beginning of the railroads after the American Civil War. In the 1870s through the 1895, the headlines concerning railroads were all about stock market crashes, fraudulent ownership tokens, trains driving off bridges, hundreds dead, and so on. Those are the headlines, and you can go back at the historical records and see that. You think that railroads were absolutely the worst thing that had ever happened to the United States. If you're just going to look at the headlines,
we're in doom.
but you look at the bigger sweep, and what you see is that it transformed American life. I mean, instead of taking 3 months to get somewhere and losing half your party on the way, you now had a safe and cheap and fast way to travel. So it's similar with crypto. It's messy and it's problematic, and a lot of people are in it just for the money. And there's a lot of scam artists and that sort of thing. But on the other hand, we are really talking about a fundamental technological revolution that I think is similar to electricity, to railroads, to flight, to internal combustion, to the internet itself.
Now, Jeffrey, where is commerce going in terms of decentralization?
Yeah, well, crypto is part of decentralization. Yeah, there's a sense in which humanity has always wanted to just deal peer-to-peer. We've always wanted that opportunity. We like exchanging cash, with people face to face. I mean, that's how we like to exchange. What the internet has allowed us to do is to have peer-to-peer exchange all over the world, and gradually eliminate or diminish the importance of, or eliminate intermediating financial institutions and otherwise. And we're headed in that direction. And that's a very important change in the way we do business, because up to now, we've always depended fundamentally on third parties and trust relationships. Now we have the technological capability of trading with anybody on the planet Earth, just by the fact that they can verify their rights to enter into an exchange with you. And we both benefit from it. And that's changing everything. I think it's changing our economics, our financial structures, and even our political relationships. In fact, I would say that the peer-to-peer revolution, if you want to call it that, is fundamentally destabilizing the old model of the relationship between the citizen and the state. I mean, it's making people realize that we can get by on our own, and we don't have to depend on the politicians to mediate all of our human relationships anymore. And that's true I think it's going to change everything. Wall Street, central banking, absolutely everything about our lives.
Now, Jeffrey, in your opinion, what is the best way for people to join the blockchain industry?
Well, that's a complicated question. I mean, I would say to a person who's just fundamentally confused about what we're talking about right now, like, basically don't do anything until you read a lot about it, and let your natural curiosity kind of take you where it needs to go. There are many ways to, I think the first step is to become an owner of cryptocurrency, essentially. And that could mean buying with dollars, which a lot of people do, but it also could mean selling your services, selling your property, making it obvious that you accept Bitcoin to your friends and, whatever. I mean, there's people in your community right now who are owners of Bitcoin that be glad to sell, glad to pay for Bitcoin for something you own. And becoming an owner is kind of an awesome thing. I have to say, out of my own personal experience, like between about 2010 and early 2013, I did not own any Bitcoin. For me, it was just an abstraction. It was something I was reading about. I was like, is this real? Is it not? But it seemed a little forbidding to me. Like, I don't know how to get into the sector,
Right.
And then finally, I was tackled by some early movers in the Bitcoin space, some of the founding fathers, so called, and they wanted to convert me. And they took me to lunch, and I sold a bow tie to them for Bitcoin. And in those days,
Nice.
Bitcoin was $14, and I knew that my tie was worth about $60, but I decided to sell it for $45. And so I sold the bow tie off my neck for 3 Bitcoin. which,
Wow.
if you think about it, you know, a $27,000 bow tie.
That's a pricey bow tie.
Yeah, I got a pretty good deal, right?
Yes,
But
you did.
the point is that I had skin in the game for the first time, and that really incentivized me to learn about it. And this is why back in the old days, I used to send a fraction of Bitcoin to anybody who's interested. If I was at conferences, I'd have people lining up, and I'd send them, you know, a couple of dollars in Bitcoin, and so I became the sort of the Johnny Appleseed of the cryptocurrency there for a
Right.
while. I think there's
Planting
many
your
people in
seed.
our sector, they just kind of send it to everybody just to kind of get people involved. And I think taking that first step is really very important for you, because then you care about the price, then you care about the technology, then you're incentivized to learn about it.
Now, Jeffrey, what is the real innovation that blockchain brings to the world?
Yes. If I gave you my answer immediately, it would not make a lot of sense. So let me just quickly start that answer by observing that Bitcoin has added to the function of money a third function that didn't traditionally exist. So money has usually served two purposes. One is as a unit of account, and the second is as a store of value. So cryptocurrency is both of those, but it adds a third function that money in all times and all places throughout all of history never had before. Cryptocurrency has built within it its own payment network, its own settlement layer. So it can settle transactions without means of a third party. So now with cryptocurrency, we have a different kind of money than we've ever had before. It's a unit of account, it's a store of value, but it's also a payment system as well. So what that means is, let me just quickly explain that. So if you go to the convenience store and you buy a candy bar and you hand them $1.50 out of your pocket, so a piece of paper plus 2 coins, they say thank you, you say thank you, that transaction is completely and finally settled. It's all over with, right? And you didn't have to have any kind of trust relationships. He doesn't know you from Adam. You've never seen this guy before. It's all done and finished. If, on the other hand, you pay with a credit card, now you've got a huge apparatus in place. The bank had to know who you are. They had to know that you were, in fact, going to pay it. The place had to buy a machine and had developed a relationship with a company that's intermediating between the customers and the banks. The place that takes your credit card has to talk to the banks, so the banks have to talk to them, and it takes 3 or 4 days, 5 days, whatever, a week, and finally the thing is settled. And you had to use all these third parties, right?
Right.
So what cryptocurrency does is it changes the nature of financial transactions or monetary transactions, so that you can have a cash-like transaction even though you're not anywhere near the person you're transacting with. So this person could be in Beijing, in Moscow, or Sao Paulo, Brazil, and you're still, when you trade Bitcoin with them, it's like a cash transaction. So the settlement layer is built in within the structure of the currency itself. So we've never seen money like this. It's like mega money in a way. You know, this is like a Maserati compared to a Model T, essentially. And so that's why it's so amazing. But that's, just to be clear, that's just the monetary feature of crypto, because there's at least 2 other features. One involves smart contracting. It allows you to make contracts with people that automatically transact once certain conditions are fulfilled. That's amazing. And the third one is the capacity to tokenize your enterprise and allow anyone in the world to invest in your idea just by buying your and holding your token. And your token is an ownership right over the protocol of a blockchain that you yourself have created. And what's amazing about that is that it holds out the potential for replacing our traditional means of raising capital, whether that's venture capital firms or loans from banks, or going out into the stock market, highly regulated stock markets to raise money. So crypto can replace all those functions too. So here's the thing. the crypto technology and blockchain technology essentially does just one thing. It just does it extremely well. It documents ownership rights. And that maybe sounds kind of boring, like why do we need to do that? Well, you go back in history, and you can go back 150,000 years and see that humanity has always needed a technology to document what I own, what you own, as a way of compelling a social acquiescence to this reality, right? So you go back to ancient Mesopotamia, you can see clay tablets and stone tablets, and technology gradually got better over time. Papyrus and parchment, and then vellum, and then we had the printing presses, and then we had databases in the 1970s and so on. Blockchain is just simply the next iteration of this technology that allows us to clearly demarcate what we own and provide an audit trail for the kinds of trades that we make. This is extremely important for the economic functioning of the social order. If you can't show that you own the car you're driving, you don't have secure rights over what you do. I remember there was a time some years ago where I was very interested in a house, and I wanted to buy it. And they said, okay, great. And the date for closing on the house was like 2 weeks. And then as we got close to the date, the title company called and said, listen, we got a slight problem. There's some uncertainty about some aspects of the title, but we're going to get it solved. So they pushed it out 2 weeks, got another call. Yeah, this is getting a little complicated. Pushed it out 2 weeks. After about 2 months, finally the title company called and said, listen, back in the early 1930s, two sisters were involved in a transaction. One owned the house, one owned a field out in the rural areas. They flipped. One said, I'll take your field, I'll take your house. They flipped ownership rights, but never documented it.
Oh, wow.
So this title company came up with something like 350 micro owners to this one house. So if I was going to buy the house, the company would have to call 350 people, tell them that they owned, 0.3% of this house, and negotiate a selling price with them in order to get a clean title. And they said, that is not doable. And they said, so therefore you can't buy this house. And what happened to that house is that it fell down and the city repossessed the land. Okay, so this is what happens when you don't have clean title to what you claim to own, right? So blockchain solves that problem for all time and forever. It creates an immutable record of ownership rights so that we can have the opportunity to have peaceful relations with each other and transact in a way that's secure, free of fraud, and so there's no uncertainties. That's essentially what blockchain technology does. And it just so happens that this amazing ability to document what we own and provide an audit trail is very useful for money and for contracts and for capital funding.
You mentioned something to me that you thought that 2008 would have been a whole lot easier, or at least a lot less traumatic for many, many people who owned homes.
Yeah.
Because if blockchain had existed,
oh, sure,
there wouldn't have been this.
It wouldn't have happened. Yeah. So what happened in the early 2000s is that our financial technology, a sophistication of financial instruments became just explosive. We got the ability to aggregate all kinds of mortgages, put them into bundles and securitize them. And then there were new derivative products that developed out of that, new derivatives that developed out of that. And it was all very impressive. And I love the guys who created this kind of stuff. I think it's amazing. And the markets were extraordinary. The problem was twofold. One was that who owned what got lost in the process. And the second one is that the ratings agencies got a little reckless in overly aggregating the risk premiums associated with each individual property, right? Every single borrower had a different capacity to pay. Potentially every single mortgage out there should have gotten a different bond rating, but it didn't, because nobody even knew or cared anymore who owned what. And so it became a serious problem, actually.
Yeah.
And so when the panic came on in the early 2000s, people were just in the mood to just sell. We don't know what this stuff is anymore. Let's just sell it. And sure enough, in 2009, once people started trying to figure out, well, who owes who money, it became too complicated for everyone. And that all happened because the ownership rights were not well documented. So if we had blockchain technology, we wouldn't have had these kind of problems. I mean, the sophistication of the financial instruments would have accorded with the sophistication of our ability to keep track of ownership and to develop audit trails, and we wouldn't have had a market panic at all. I mean, we probably wouldn't have had the boom, but we wouldn't have had the bust either. Everything would have been rational and clear, just like markets should be. So if we can blockchain real estate going forward and our debt obligations to each other, we won't have these problems anymore. And actually, there are many companies in the world, all over the world, that are busy trying to do this right now as a way of preventing this kind of thing in the future.
Now, Jeffrey, here's a question for you that a lot of people have a fear of. Will Bitcoin and other cryptos be outlawed if governments decide to make national cryptocurrencies their priority?
Well, I think governments have tried to outlaw crypto, but without success. And I understand why it's not successful. It's a little bit like governments trying to outlaw algebra. I mean, okay, governments can outlaw anything, but the thing is that math exists in the realm of ideas, and it's in the same way that crypto is straight up math, and so you can't really get rid of it. Trump issued some sort of executive order a few weeks ago telling everybody not to buy the petro from Venezuela. Okay, well, I wasn't planning to, but I'm just not sure how enforceable that is really. And I'm sorry, I forgot the second part of your question.
If they decide that they want a national...
Oh, the national cryptocurrency. So governments aren't very competent at creating cryptocurrencies. And if they do, they're going to have to compete with market-based cryptocurrencies. And my analogy here is back, it relates to email. Back in the early 1990s, U.S. government and the U.S. Post Office decided that we needed a national email system to replace AOL.com and CompuServe and Earthlink and all the things that were around at the time. So they created a kind of a national database of emails, and they wanted everybody to register. Well, nobody did.
Oh, really?
Yeah, the machines, sat on the post office, and nobody even touched them. Like, why do you want that?
Oh.
And it was a little bit of a shock to the Postmaster General. He thought that everybody would go for this because nobody would trust the private agencies. But it's even more intense with crypto. I mean, if the U.S. government decides to create its own cryptocurrency, it's going to have to compete with Dash and Bitcoin Cash and Monero and everything else. And I don't know, governments aren't generally good at this sort of thing. And so far, every government that's created a cryptocurrency has made some fundamental mistake. The deployment is different from the white paper. They're not being transparent about exactly what they're planning to do and so on. So, I'm actually skeptical of it. I don't begrudge any government that wants to create a cryptocurrency. That's fine. But at the same time, if it's a real crypto, it's going to have to obtain its own value on the market. It can't be tied to the national currency, and it's got to find buyers in the marketplace. And therefore, it's going to have to compete with something like 1,000 different cryptos that are already out there.
Oh, yeah. Now, Jeffrey, what is your viewpoint on Satoshi Nakamoto? Why has he not come forward and introduced himself to us?
I guess I just know so many people that were early on in the space, and I also know the way ideas came from. But some people think of Satoshi Nakamoto as some sort of godlike figure who came up with a white paper and just came up with this all on his own. I actually don't believe that, because that's not how ideas emerge in the world. I'm guessing that there were something like 100 cypherpunks in those days in 2008 that were working on Bitcoin. And I think probably the name Satoshi Nakamoto came to be used by several. Maybe it was 7, maybe it was 3, maybe it was 15.
A group.
Who were, it was a group of people, and they decided to make Satoshi the sort of poster child of this technology. And that's why we've never discovered who it is, because that person doesn't actually exist. It really is a composite for many other developers that are in the space. And I think we know who those people are. And but I think if you do something like this, you're kind of sworn to secrecy forever. And the reason we don't know who Satoshi is that Satoshi doesn't actually exist. That's my personal theory of the subject.
That's a great theory. I think you're right.
Yeah. And so Satoshi owns a lot of Bitcoin, but what that really means is that and most of the Bitcoin
6 or 7.
They were mined before Bitcoin had any value at all. And it just so happens that they're immensely valuable now, but I don't know. Maybe there's an agreement, like some smart contract between all the original claimants to the Satoshi label, that in 2040 or something, all the money will be distributed. I don't know.
It's very possible. It actually sounds quite logical to me.
Yeah.
Now, Jeffrey, can the case still be made that Bitcoin is like digital gold, or was that a fad that is no longer relevant?
Well, it depends on how you think of gold. Gold has been, at various times in history, a tool for personal transactions, and other times just a settlement layer, between nations. And I think that Bitcoin has become more of a settlement layer. It's not really used hand to hand anymore. Yes, it's traded, but there's so many currencies that have been innovated in 2017 that are designed more for hand to hand use, and Bitcoin not so much. So, and part of the reason is that it became very expensive to use, and another reason is that everybody expects it to go up in value, and any investor knows what to do with a deflationary asset. You don't sell it, you hold on to it, essentially, because you expect it to be more valuable later. So I think Bitcoin has become the thing that you hold, not so much the thing that you buy your cup of coffee with. We have plenty of currencies that you can do that with. And part of the reason is an artifact of the technology itself. The block size was not increased. The fees were becoming exorbitant. And it changed the whole kind of ethos of the Bitcoin space. But there were many forks and many other innovations that are taking over that role of transactable currencies. And at the same time, there's innovations taking place within the Bitcoin space. I mean, I think probably in 12 to 24 months, we're going to see a lot of different solutions to the expense and time associated with transacting Bitcoin, Lightning networks and otherwise. So there's a lot of change that's coming, and that's the important thing to remember about this. I think sometimes people get a little judgy towards cryptocurrency. They look at it and they go, well, I can't understand it. It's too volatile. It's
too complicated.
It's not secure. I know people whose Bitcoins are stolen and so on. And it's a little severe. Technology doesn't come fully formed from a cloud and handed to humanity. There are people that have to work on this every single day. There's decisions to be made. People make mistakes. And we just have to get better at it in response to market demand. And I think that's where we are. I mean, this is in many ways still a very early stage of crypto. But also that is an opportunity for investors to get in early. I mean, in terms of railroads, this is 1870. In terms of indoor lighting, this is 1915. Or rather 18, I would say 1890. In terms of flight, this is 1910. In terms of automobiles, this is 1915 and so on. So, and in terms of the internet, this is 1989.
It's just an awesome, explosive time. It's the babyhood.
Right. And what's been fascinating to me is that over the last several days, at a time when you've seen the markets crashing all over the world in response to political pressures and things, the crypto markets are really starting to show some bullish recovery, signs of recovery after a really grim first quarter. So, I mean, is it possible that we're starting to see, crypto being treated as a safe haven for investors? I think it's very likely, actually.
Now, Jeffrey, do you think that central banks will buy cryptocurrencies?
They may, in the sense that they buy any valuable asset. I think it's possible. I don't think it's going to have that much impact on the markets. What I find most interesting about the central banking question is that, the central banks have always in the past depended upon being a kind of monopoly supplier of money. It's very crucial for their macroeconomic planning strategies that they are dealing with the only money in society and that all that money goes through the regular banking system, and that's no longer true. And it's going to be less and less true that they don't have total control anymore. And I think it's going to mess up a lot of planning. I mean, this has been going on for a long time. The power of central banks is really diminishing. They can't keep up with how much money there is. They don't even know how to control how much there is. They push and pull their levers. Nothing works anymore. And that's really going to be true in more and more in the future, especially with crypto coming along, which is why a lot of people have really panicked actually about it. I mean, there's going to be a lot of resistance to crypto in the future. It kind of threatens a lot of special interests, but I think this time there's nothing they can fundamentally do about it. They can slow us down, but they can't stop us.
Now, what do you think are the top 3 innovations that you can name that are going to lead us into mass adoption?
Well, we have to have better user interfaces, and we're so far from that. I mean, like
Yes.
right now, I think if I showed my mother a wallet, she would just like, I don't know what this stuff is. And I think we're going to have to, I don't know. I mean, mass adoption, people have to have a reason to switch from the current system. And right now that doesn't really exist. People are very happy using dollars and credit cards and so on. So I think a monetary crisis will trigger new levels of adoption, better user interfaces, and let me think of a third thing. We need some large-scale retailers to throw themselves into the crypto spaces in some way. Maybe that's through their own innovation of their own coins. Maybe it's an Amazon coin. That's entirely possible. Which could easily be created out of the existing credit structures that Amazon's building up right now. So something like that could happen. I don't think it's going to come through just Bitcoin adoption. I think we've been there, and that wasn't really it. But yeah, I don't know. Humanity needs a reason to change. We have to think back. Back in 1910 or 1915 or so, there were plenty of farmers in America who were very happy plowing their lands with their horses. They didn't need gas or steam powered plows. They thought that was ridiculous. They couldn't get replacement parts. They had a deep investment in the existing structures, and a lot of people resisted that change. And it was only innovative farms that decided to adopt the new technologies. So people are slow to change, and maybe that's good. Maybe that's good. I don't know. Right now, crypto is still a narrow interest, although I saw some data recently that said something like 8% of the American population owns some crypto, which is shocking to me in a way. Right. Like I never would have imagined in 2013 when I threw myself into these markets entirely that we'd ever get to 8% adoption. I mean, that's just incredible. But that's just going to grow and grow and grow. It took 20 years for email to become a universal communication technology. And we're still very early on in crypto.
Yes. Now, Jeffrey, what are the major stumbling blocks that are still facing the cryptocurrencies?
Right now, I think people are so distracted with regulatory compliance that they're neglecting the consumer. I mean, that's a major problem. Regulations are a constant threat. The SEC is always putting out new notices like, oh, I think your token might be a security, or I think you're not paying enough taxes on your gains, and so on. It's just not, we think you're a money exchange, which means you need to register, and so on and so on. And it just never stops. There's just a kind of a constant noise coming from regulators in Washington that's distracting people from innovation. I think it's really tragic. I mean, if we had the right kind of governments, we would they'd be celebrating these innovations as brilliant contributors to the future. But the truth is that progress is hard, and governments almost always resist genuine progress. They're hardly ever, if ever, the source of progress. Quite often, they're just trying to draw us back into the past. And so I would say that's a major stumbling block at this point.
Now, Jeffrey, you have an extraordinary background. For our audience, could you share a little bit about your background for us, and how did you get into cryptocurrencies?
Yes, sure. Well, back when I was in college, I became an economics major because I'm fascinated by the science. And I read a book on the Weimar inflation of 1921, 22, and 23, and saw how that catastrophe for Germany paved the way for Hitler and led to World War and the Holocaust and so on. And I connected the dots in my mind. I was like, wait a minute. So if you get the money wrong, everything in society goes wrong. Like, that's the thing that you have to have. It has to be sound, it has to be solid, it has to be reliable, and people have to believe in it, and it has to work. And if it stops working, the whole society can go into upheaval. And so I got really curious about monetary technology, and I wrote my undergraduate thesis on the gold standard. I went to work for Ron Paul. I always admired his work for the gold standard. And I read all I could about money for years and years. And so when Bitcoin came along, I was like, oh, so you're telling me you can make magic internet money by typing on a keyboard? I don't believe it. And so it took me several years.
You weren't alone.
Yeah. It took me several years to come around, and I finally realized that what Bitcoin had done is replicated all the features of money for the internet age. And once I became a convert, I went all in, and I've loved it. You know, for the last 5 years, just really following, being engaged in the cryptocurrency world and blockchain technology, and learning more every day and watching the changes. I don't know. It's, you know, to be involved in the blockchain industry, it's just a great time to be alive.
It's just amazing, exciting, explosive.
Yeah, absolutely.
Yeah. Jeffrey, this has been an amazing interview. How can everyone follow your work?
Sure. Well, I write at the American Institute for Economic Research every single day. You can follow their Facebook page, and all my stuff's posted there. Their Twitter account. Most everything I write appears on my own website, jeffreytucker.me. And so you can go to that and see almost everything. And yeah, I mean, that's and of course my Vellum Capital hedge fund has a website. The Atlanta Bitcoin Embassy has a website. So there's a lot about me on the internet. So if you want to get a hold of me, I'm easy.
You're all over.
Yeah, I'm all over.
Thank you so much for being with us today.
It's my pleasure. Thank you.
Mr. Jeffrey A. Tucker, CEO of the Atlanta Bitcoin Embassy, also an author and the founder of the Cryptocurrency Conference. For Cryptocurrencies, the Future of Digital Money show, I'm Michelle Holliday at PortfolioWealthGlobal.com.